You were listening to chartingwealth.com for Tuesday, the 6th of March, 2018. Let's jump right into these markets. We see the S&P 500 and the Nasdaq 100 up for the day. TLT, that's the 20-year bonds, down along with gold down. Let's jump right in to the S&P 500. Now remember, we use Heikin Ashi candlesticks. 64,000 people have taken that training that we offer for free at chartingwealth.com or at our YouTube channel. Just look it up under Charting Wealth. If you go there, please subscribe. We always appreciate that. And what do we see with Heikin Ashi candlesticks? Well, that means average pace in Japanese. And we can see that this week has already started off with the Heikin Ashi candlesticks forming a red candle, even though it was up for the day. Why is that? Because Heikin Ashi candlesticks are calculated differently, and you will learn about that and how it helps you see the average pace of price movement based upon how those are calculated. It's not your typical candlestick, open, high, close, and low. So what do we see going on? Well, the derivative oscillator is heading down, not at the same angle it was over the last week, but still down. Derivative oscillator is down, price percent oscillator heading down. And as we look at the weeks and the sideways slide that we've had, remember we had that huge down week of the weekly vertical crossover going down, ending on the 9th of January. Then things were up the following week, actually the following 2 weeks. And then over the course of this past week, ending the 2nd of March, we had a big doji. Lots of indecision tending down due to the red nature of that doji. And we see over the course so far, the first day of the latest 5-day candle. Remember, a weekly candle is 5 days. So we're only 1/5 through this. We don't hold a lot of weight as to what we see on Monday. If you remember over the course of the prior week, we had a big green up candle for most of the week until it blew off on Thursday and Friday. So what we see going on right now appears to be continued down movement. Again, remember when we had that huge down course of, actually we had 3 big down candles, that it represents 6 days of strong down movement, leading to the weekly vertical crossover going down for the week of Friday, ending the week of Friday the 9th of February. That kicked really the supports out of the market that was going up, 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 up. Over the course of the next week or so, it tried to recover and then started moving down. And we still have a crossover. Remember that crossover on the 2-day chart started back on the 5th of February. So it started at the beginning of the week. At the end of the week, the down movement was enough that it actually caused the weekly to cross over. So we're still with the weekly and the 2-day in confirmed down moves. Now let's take a look at the before we leave that, just look, the price percent oscillator sliding sideways. Derivative oscillator is losing downward momentum. Now, as we look at the 4-hour chart, what do we see? We saw some up movement in the morning on Monday and much stronger up movement in the afternoon. For those of you who jumped in on that 4-hour chart, just be careful as you see that retracement. Going to see if indeed the 50-period moving average on that 4-hour chart gives you any kind of ceiling on that movement and it bounces off of it. It may or may not. If things start to blow up through and you start seeing crossing overs on those, you want to be very careful as to how those would impact you with the jumping in point that you had there. So we'll just continue to keep our eyes on the prize. Pay attention if you do see a full rollback and a crossover going up on that 4-hour chart. Be careful, but we see the way things ended right there on that 50-period moving average line. So keep your eyes peeled for that. Okay, we go from the S&P 500 to the Qs, the Nasdaq 100. What do we see going on there? Well, the down movement was not nearly as strong on the Qs as it was on the S&P 500. And what we see now is we're still negative as far as the price percent oscillator goes, but it's really just sliding sideways. Again, not a strong down. We see that the derivative oscillator also is really just sort of pegging along sideways. We do have a red spinning top at this point, an open box, not a strong red down candle, but it does mean indecision, not as much as a doji, but still indecision in the marketplace, tending down. And as we move from the weekly chart to the 2-day, what do we see there? Well, the 2-day looks like, I mean, again, with this sideways slide, we had the market flip over going up on the 2-day, then going down on the 2-day for Thursday, the candle ending on Thursday the 1st. And then, of course, the latest candle represents the movement on Friday the 2nd and Monday the 5th. And what we see happening here is we do see a down candle, but because of the way that the weight of the oscillation of the up movement in the, I guess on the 2-day candle on the 23rd and the 22nd, with these weak down moves, you still have things oscillating upward. So you see the derivative oscillator actually turned green, and the price percent oscillator appears to be pushing over, trying to go up. So keep your eye on things. It is, again, when you have things bouncing around like that, lots and lots of indecision. We're going to stay with the down move until we see how the new candles start shaping up on the 2-day chart, just because of the 2 red down candles. So keep your eye on things. As we go to the 4-hour chart, what do we see there? Well, we see 3 up candles, really a doji for the end of the day on Friday, up movement in the morning, and then strong up movement in the afternoon, retracing those prior losses. So keep your eyes on things on that 4-hour chart in particular. Things bounced off that 50-period moving average line. Okay, back to the weekly chart, and we'll go to TLT, the 20-year bonds. What do we see going on there? Well, of course, we've got strong down movement that had been going on for 4 weeks, and then we saw for the week ending the 2nd of March, there was a bit of a spinning top up week. I mean, again, indecision tending up. And so far for the course of the latest week, down. Derivative oscillator, however, is losing downward momentum. Price percent oscillator still heading down, but not as, well, about as strongly as it had been the prior week. But again, back when we go all the way back to, say, February the 2nd, strong down movement again on the 9th, and then things sort of has slowly started weakening. And again, really things bottom for the week ending the 23rd of February. So again, we'll just continue to watch, but it does look like the week is opened up down. Again, TLT down 0.27%. As we look at the 2-day chart, we can see how things had bottomed and then started rolling up. And this latest 2-day candle shows us, of course, and again, it's trying to cross over going up also. And rather weak crossover going up, but I do think, again, we should probably pay attention to that. We don't have to totally call it right now because of the red down candle, but I think we're just going to go ahead and note it. It could rotate right back over going down if there's a big down day on Tuesday. So we'll just sort of keep an eye on things, but we're going to go ahead and note that and make sure that we note that up movement. So that's where we are as far as the 2-day chart goes, and we do have derivative oscillators positive and the price percent oscillator rotating over again, really weak like we saw back there on the Qs. And as we go to the 4-hour chart, we can see on that 4-hour chart how down day on Friday, little bit of an up movement in the morning on Monday, and then down strong in the afternoon. So again, just keep our eye on things. Don't have a crossover yet. Derivative oscillator losing a lot of energy on that 4-hour chart. The price percent oscillator is headed down just barely, not really super strong. So we'll keep our eye on the prize there and just see how things shape up as this week continues to move ahead. Lastly, we go to gold. And of course, what do we see the week starting off on gold? Crossing over, going down. Now, does that mean we have a weekly vertical crossover? Well, not until the end of the week if that down movement holds. Derivative oscillators rotated over, going down on gold, and we're sort of entering into the second week of down movement if it indeed ends up that way. And as we go to the 2-hour chart, what do we see there? Well, we again see For the latest 2-day candle, sort of a green doji price movement is below the 2-day trend line. And remember, we got a little bit of schizophrenia going on here until we have a certified weekly vertical crossover going down on gold. Gold's still in a confirmed up move until the week's out. 2-day chart is down and has been down since all the way back on the 7th of February. Was down for 3 weeks, up for 3 weeks, and now down for 4 weeks. And we'll see how this latest week sizes up. And as we finish up with the 4-hour chart, we're seeing it trying to cross over going up. Hasn't really done so yet. We sort of see price movement go up to about where it started moving down back on the 4-hour chart in the afternoon of Wednesday the 28th, somewhere along those lines. Gold was up in the morning, down in the afternoon. Maybe crossing over going up. We'll keep our eye on things. If it does, we'll just continue to track and see how well that 4-hour chart might or might not serve us. Again, with that weekly vertical crossover potentially going down, don't know how long that up movement might hold. It might just be there to sort of fake you out. That's where we are, folks, as we end the day on Monday the 5th and go into Tuesday the 6th of March. Thank you so much for being with us. You have questions, problems, concerns, write to us, cw@chartingwealth.com. And again, if you want all the great things we have to offer, you need to go to the website and subscribe. You can subscribe easily, putting in your name and your email address, and you will get everything we have to offer at chartingwealth.com that we put out there for free for you. All the new trainings come out first to our subscribers, along with the new chapters in our book as they are prepared. And of course, everything else we have, plus the latest updated charts that we have as far as the layout at freestockcharts.com. The discount we have, if you're looking for what I consider to be the absolute best trading software that there is out there, charting software, that is TC2000, the paid service of freestockcharts.com. Will save you $25. We've got the link there for you to go and check that out also. And that comes out every day to our subscribers, along with the weekly market worksheet PDF, the daily market worksheet, and the trade worksheet. That's where we are, folks, as we end the day on Monday. Going to Tuesday, the first full week of March 2018. God bless. All the best from the whole team here at Charting Wealth World Headquarters.